Hey guys, what's up? How's it going? Welcome to week number 36 of the dividend investing case study. This is a dividend investing case study where I basically grow a dividend investing portfolio completely from scratch. All right, so this portfolio I started in January of this year, and I've basically been posting an update every couple days, and I'm showing you guys how I've been able to build a dividend portfolio completely from scratch. So in this video, I'm going to show you guys what I've been buying over the past little while. I'll show you guys the earnings that we made, and I'm just going to kind of document how things have been going. So if you guys are brand new to the channel, be sure to like the video and subscribe to the channel if you guys want to see more updates on this Canadian-based dividend portfolio. All right, so the first thing we're going to cover is the earnings from the portfolio so far, and I've basically been recording these on a monthly basis. So when I first started the portfolio in January, I have the earnings here, and then I have the monthly contribution. So in January, we made just a couple cents, and then as every month kind of went forward, we just kept earning more and more, a couple more dollars, all the way up to about $13 in June, and then July $13, and then August $11, and September currently sitting at $9.23. And you can see here in July, I kind of upped the contributions and I put a lot more money into the portfolio as I'm focusing more on dividend-based stocks. And then on the right side, we have the total dividends earned from this dividend portfolio. And then underneath here, I have the total portfolios from my REIT stocks and my dividend stocks all together. And the REIT stocks I've kind of tracked a little bit separately here. It's the same portfolio, I just kind of keep them tracked differently. And you guys can see here that we have the different monthly earnings as well and the monthly contributions. So once again, the REITs I've been investing into on a regular basis, and they're designed to give me some monthly income. So September, we're currently sitting about $11 from the REIT stocks and about $9 from the dividend stocks, which is about $19, $20 in total. And I'm going to probably lay off my contributions for the REIT stocks to be a little bit less and focus a little bit more on the dividend stocks, but I'll definitely be investing into both as time goes on. So that's the quick little earnings recap. I just want to show you guys that. So now we're going to jump into the portfolio and actually show you guys how my stocks have been doing. All right, so here's my dividend portfolio on Wealthsimple Trade. If you guys want to set up a new Wealthsimple Trade account, I'll put my affiliate link in the description of this video. You guys can click that link and get $10 that you guys can invest if you open a new account with Wealthsimple Trade. So here's my portfolio so far. We have $5,582, and the past couple days have been a little bit weird in the markets because they've been going down, and now we're on our way back up. So for the past day, we are up $27, which is 0.50 cents. Over the past week, we are up $68, which is $1.25. And then in the past month, we are actually almost back to zero. And then all time on the portfolio, the dividend stock portfolio, we are up about 0.96%, which is about $52. So we're slowly on our way back up. And if you guys remember last week, in my last update a couple days ago, I posted an update on how Wealthsimple Trade was ending their contest, and we got a bunch of referrals into the account. So just want to say really thanks to everybody who used my link over the past little while. We got tons of referrals, as you guys can see. It was pretty crazy. So big thanks to everybody who used my link. We got tons of money, and I sticked it all inside my Wealthsimple Trade account, my dividend stocks mostly, and I put a little bit inside my REIT stocks. So and I'll show you guys what I'm buying in just a second. We currently have about $200 that are waiting to be deposited inside the account, so we'll probably put that in over the next couple days, and I'll probably make a video. But when it comes to my buys over the past couple days, I'll just show you a quick little screenshot of the stocks I've been buying. We'll do my dividend portfolio, and then I'll talk about my REIT portfolio in just a second here. So we'll go to my dividends, and then we'll go into buys. And you guys can see that I've been buying a lot of VDY, and I also bought some VYM, which is my US-based dividend stock ETF. I'm starting to buy some more of that, and then I bought a couple random companies here, but my main focus was to buy some more shares of VDY and to buy some VYM and try to build those out in my portfolio. I bought 242 shares of VDY yesterday, so I'm trying to get more VDY and more VYM, and I'm trying to build them up to be about 40% each of the portfolio. And then once we hit there, I'll probably start buying some more individual stocks again as we go, kind of thing. And over the past little while, we have been giving some dividends into the account. Nothing new since last week. We have 23 cents from Severia and then some other ones here at the bottom. But as we approach the end of the month, we should start to see some more dividends rolling into the dividend-based account. So let's check with the REIT stocks, and we'll see how my REITs are doing for today. So REITs have also went down quite a bit, but they've actually had a bit of a recovery as well. You can see in the past day, they're actually up 1.53%. So that's actually quite a bit of an increase, and that's $60 in total. Over the past week, we're up about 2.48%, and over the past month we're just about zero. So all time we were up just a little bit, actually 1.37%. So they had a nice little recovery, and I definitely bought some over the past couple days as well. And I even bought some today. So if we go inside the buys, we'll check out the buys for the REIT portfolio here in just a second. We can see here that I did buy, I mostly bought, once again, a bunch of ETFs. I bought some shares of VRE yesterday. I bought some shares of XRE. I've just been buying a lot of shares of these ETFs just to kind of, once again, bring that balance to the account. And then I'll probably be buying some more individual REITs. But I'm happy that they've been going up. And of course, you know, like I mentioned in all my videos, we're taking those dividends and we're reinvesting them back in the account so that money can keep growing over time. And if you do a quick little lookup on Dividend Tracker, I'll just show you guys some really quick stats on the portfolio. We can see here that once again, total value of the portfolio is $8,818. We're currently sitting at an $8 gain. Keep in mind this Dividend Tracker, they're a little bit lagged behind the market, so it's a little bit slower to update, so obviously that will go up over time. But I like to do this just to see the overall stats of the portfolio. We can see here that we're currently sitting at a pretty high yield of 5.93%, which is almost 6% dividend yield. That's pretty high, but keep in mind we also have a lot of REITs, and keep in mind the bulk of this portfolio was invested earlier this year when everything was kind of, most stocks were lower priced and the yields were pretty high. So that is nice to see, because over time that is going to grow. And then we have our yield of cost here, which is about the same. If the portfolio is kind of sitting around, you know, that 0 to 1%, it's probably going to be pretty close. And over time, hopefully the yield of cost will increase as well. And our annual dividend income from this portfolio is currently $522, so not too shabby overall. Alrighty, so before we end this video, I'm just going to answer some questions that you guys left in the comments in the previous video. And the first question we have is from Siddhartha. I hope I'm saying that name correctly. They say, great video. What do you think of buying Canadian Utilities Company? Would you be buying this company anytime in the future? Keep up the great work. Thanks. Canadian Utilities is actually a really good dividend-based company. In fact, I think they're actually one of I think they're actually a dividend aristocrat, which basically means that they've increased their dividends for many years and they've had some really good growth. So they are a great company, and I do hold them in some of my, I think I hold them in VDY. I think they're one of the holdings in VDY. Don't quote me on that, but I do think they are in there. But nonetheless, I actually have been, I have thought about buying them as individual stocks for my portfolio. Just haven't got around to it yet. But all in all, I think Canadian Utilities Company, it's a great buy, and it's a good dividend-based stock, and it's had a really good history. So I think it's definitely a great stock to look into. And last question I got from the channel for today, guys, is from Wendell Garcia. Wendell says, once again, great video. Can you explain to me, when you were talking about VYM, you said something about paying a fee. What does that mean? So I'm going to answer this from two. I think you're either asking the fee for the ETF overall or the fee from the dividends inside the tax-free savings account. So I'll talk about both of them. So if you guys have a tax-free savings account and you guys hold US-based dividend stocks, because it's US-based or it's foreign-based, you will pay a fee on the dividends. So if that's what you're asking, yes, you'll pay a fee on the dividends, but overall the stock appreciation and the overall dividend growth usually outpaces it. That it's not really that big of a deal. If you're really concerned about the taxes of holding US stocks in a TFSA, you can hold them in an RRSP and you won't get taxed on them. So that's something you can think about as well. But overall, you can hold US-based stocks into a TFSA. I don't think it's that big of a deal. And if it comes to, if you're talking about fees for the actual ETF itself, I brought up a page on Vanguard website that talks about the ETF, and all ETFs basically charge a fee for buying them, just for like simplicity and management and whatnot. And the cool thing about VYM and most of the Vanguard funds is they have really cheap expense ratios. You guys can see here that this high dividend yield ETF has a yearly expense ratio of 0.06%, and as opposed to one maybe at a bank or something that has a 1%. And you can see the difference here. Over the course of 10 years, if you have the fund with the 1% fee, you pay $2,242, versus if you have this Vanguard fund with the 0.06 fee, you only pay $142. So fees do make a big difference. They're important to calculating overall return. And the last ETF I had, which was XHD, it actually had a pretty high fee. I think it was 0.4%. Or 0.40%, sorry. So that's quite a big fee, and it's something to think about as time goes on, and it definitely does add up, especially if you own a lot of money, right? So it's something to consider, and Vanguard funds are really good because they have really low fees. So hopefully that answered your question, and let me know in the comments. So that's it for today's video, guys. Hope you guys enjoyed it. Let me know what you guys think of the dividend investing case study in the description of the video. If you guys have any comments that you want to share with me or any questions for me to answer next video, please feel free to do so in the comments. And I hope you guys enjoyed this video. And once again, if you guys want more Canadian-based content and you guys want to follow along the slide with me as I build up this dividend-based portfolio, please remember to subscribe to the channel and hit that like button. Thanks for watching today, guys. Have yourself a good day, and I'll see you guys later.